What's going on, guys? It's K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a great Wednesday today. Now, we were expecting some volatility in the markets, right? But what we are seeing right now, we do need to talk about this because right now, as I'm making this video, Bitcoin is sitting at the absolute most critical support for the bulls to maintain. You can see the significance of all of this support back here. And if we draw this line all the way out, that's exactly where we're sitting right now. Okay, so this is very, very serious. Also, if we come over here to the CME futures chart, we know that we didn't fully close the gap, and you can see right here, guys, again, we are sitting directly on that red zone. And also, if we come over here and just look at the 4-hour, you could see that we've actually broken out of this formation. You could see right here, we actually started to fall out. So in yesterday's video, we were talking about how I was a little concerned about this was looking a little bit like a bear flag, right? Now, something that also happened, this is on the 4-hour, so obviously it took a little bit to put these candles in, but you can actually see if we take this resistance down here, we also have a potential bear pennant. So these are two bearish formations right now. We have this pennant right here, right, this triangle, and we also have this flag right here. So really what we need to do is we need to bounce back up into this level. We need to get back above $29,600 in the short term to maintain this bullish trajectory for Bitcoin. So what I want to talk about today is a little bit of a warning just in case things do get a little bit crazier. There may be that possibility, and I still do think we are going to get a bounce, but I do wonder, since a lot of this right here happened because of the Terra Luna UST FUD, like we said, maybe this was not the true capitulation. The real capitulation could be something, you know, where we come down here, fall a little bit farther before having that big bounce. Now, the only reason that I bring this up is because if we have a look at the S&P is also putting in a red candle, and Bitcoin is following again, right? So this is what we have to talk about. Now, speaking about what the Fed has been doing, we know that they're maintaining their hawkish opinions. This is probably going to keep hitting the markets pretty hard. However, something interesting is that the Fed did something very similar back in 1994. So if we actually have a look at what happened back then, could it give us some clues to what's going on right now? Well, I will say that it is very different. I was actually surprised with the data. And the other thing we need to talk about is it going to get worse before it gets better, essentially? Or is this just a fake out, right? So if that sounds good to you, you know what to do. If you're not subscribed, I'm going to try to keep this video a little bit short, but you know that's probably not going to happen because we always make long videos. But if you like this type of content, even during depressing bearish trends, slap a like, get subscribed, turn on the bell notification, and let's dive in. So this is some legacy support right here for Bitcoin, and that level is sitting right here, basically where we're sitting right now at around 29,000. You can see the lowest candle that we had right here actually closed at 28,726. So if we fall below 28,700 and we close below that, this means we have completely, totally changed the structure of the market, and it does not look very good, honestly, as far as Bitcoin's price is concerned. Now, there is that possibility that we just want to come back down here, retest that. This could be an excellent opportunity for a long at around 24,560, or you could take the flip side and try to short it. But as I said, a lot really is depending on what is going on in the S&P right now. So it almost seems like at this point, we should just be doing technical analysis on stocks, on the NASDAQ, on the S&P, on the Dow, and not Bitcoin, because Bitcoin just seems to be doing whatever else, the stocks are doing. And one thing that was actually a little bit upsetting is that the stocks actually had a decent, little mini green candle rally yesterday. And having a look at what Bitcoin did, we kind of just continued to fall, right? And you can see right here, this is the lowest of the legacy support we can actually have. And that level is around 26,000. Now, we did come lower. We came down to 25,500. So is that going to be the cycle or this capitulation low? Well, I just want to point out right here, guys, after we had this massive dump right here, we did have the capitulation wick. We bounced back up. Bitcoin was able to come all the way back up to 41,000 after crashing down to these levels. But look at this, guys. We actually ended up putting in lower wicks before we continue to the upside. You know, people thought right here that this candle was the capitulation. Look at this. We bounced up, gave some hope, and fell even lower, right? So this is why, oh, and somebody in the video yesterday was like, you know, I wish I didn't have to short. You don't have to short. You don't, right? You could just dollar cost average. And I don't short Bitcoin that often. Actually, had I been shorting Bitcoin all this time, probably would have done very well, but I'm not really a fan of doing it. As you guys know, there are traders out there that will talk about stuff every day, flip-flopping up and down. You know, I suggest go follow those channels if that's what you're in for. For the most part, guys, you know, I am a Bitcoin bull. I'm a Bitcoin hodler. I do take advantage of some trades here and there. There are some potential trade setups happening. I think in the next 2 to 3 days, we'll be able to really pinpoint them. If you guys obviously want to learn how to trade, check out the tutorial above. There's over $16,000 in bonuses below. But ultimately, the level that I would be looking at is around 26,700. But what's actually kind of interesting is, considering everything going on with the Fed right now, the fact that we're actually seeing the dollar kind of stall out right now is a little bit interesting. The UK actually just came out with their inflation numbers. They're over 9% as well. So I do wonder, is everyone going to take this hawkish stance globally? Do you think everyone's going to try to fight inflation, or is it just the US doing it? Because there is a lot of inflation globally, hyperinflation in some of these countries right now, and that is exactly what they're trying to tackle. So I still stand by these numbers, and I'm not changing them, guys. If we have the 200 weekly, it still sits at around, it's almost at $22,000. So that is basically putting my low at around 22,000, with the bullish case is getting up to 41,000 here. And anywhere in the middle, as you can see, you know, whenever we get in the middle of these bands, for example, you know, really like down here, all we're doing is just a cumulative chop, right? That's really all we're doing. You know, what did we do here? Same thing, danced around here, super boring, right, for a few months. COVID, you can't really count that. Black swan event, but nevertheless, we did sort of dance out of there. And as soon as we came out, boom, right? I mean, it was like fireworks, right? So, you know, it could do, like I said, we could do something similar like that, come around here, dance around, or maybe we don't even fall so fast. You know, there is a possibility we come up and retest this 37,000, then come down, you know, and at that point, this will be a lot higher. And then, as I had said, you know, sometime around October, November, maybe we get back to those levels, you know, previously. And then this is like our little mini bear market, right? That's assuming that everything goes according to plan with the Fed and they don't get too crazy, right? Now, we're going to talk about that in a second, but obviously these Bitfinex longs, you know, they're still long. And I mean, if we, you know, move these over to the daily, you know, you can see they're still holding them. They're not closing them out, sitting higher than even this green candle over here, right? So what is going on right now? Well, we had Fed Chair Jerome Powell delivering economic policy insights during the Wall Street Journal's Future of Everything Festival. He said, "I don't know if financial conditions have tightened more than this in a very long time." Powell appeared to confirm that 50 basis point key interest rate hikes would continue in subsequent meeting of the Fed's open market and could reach neutral levels in Q4. Hikes afterwards, however, could nonetheless continue if necessary to tame inflation further. And like Alex Kruger pointed out, hawkish reminder, this is the biggest risk for the market. So Fed's Powell said, if need to move past neutral, we won't hesitate. We will continue raising rates until we see inflation coming down. So they estimate that, you know, neutral is not actually zero. It's 2 to 3%, right? It's what we assume the normal inflation is supposed to be, right? Because this is how these, you know, government-backed fiat systems work. But essentially, they're saying that the futures markets have priced it at around 3.25% by December. So, you know, I said November, December, that could be literally what we're waiting for. You know, we could go, let me get all these scribbles out of here. You know, we could, like I said, I have no idea which way the markets are going to go short term, up, down first, I don't know. But we could see that, you know, until, you know, maybe we have that crazy drop, come back up here, and then, you know, around that, you know, November area is when we really start to move back up again. That is a very, very strong possibility. Now, here's something interesting. So I was curious, you know, when this had happened before. So back in February of 1994, in the year to follow, under the Fed, they had the former chair, Alan Greenspan. He nearly doubled interest rates to 6% in just 7 hikes, including 2 half-point increases and 1 3/4-point hike. Now, what's very interesting about this time period is if we go back there, and I could have sworn I had it marked off right here. So this is essentially the little area that this happened in, right? Now, the more you get it off the log scale, obviously the more intense it looks, right? But the thing is from peak to bottom, we only fell 10%. Now, we did go sideways in a choppy crab market, for pretty much a year on the nose, before, basically breaking even. So this lasted for about a year. Now, the only thing is, if we compare it to what's going on today, let's get out of here. This is a little bit more extreme than what we saw back there, because from top to bottom here, we had 20% and we're still sitting around 17%. So considering that was during the entire move and only saw 10%, and this has only just begun and we're already down 17%, we had been down 20% at one point, which is technically the definition of a bear market. This does look a lot worse to me, and it does seem like there could be some cause for concern. Now, I still think, regardless of the short-term price action, we are going to see an absolute transition, or what do they call it? The generational wealth opportunity, whatever they call it. This is definitely going to be an amazing generational buy. I definitely think that when the prices do bottom out, these levels are going to be looked back on as historic opportunities in both crypto and stocks, traditional assets, whatever you're trading, etc. But in a new interview, can't talk today, guys. Long week. I'm supposed to meet my buddy to move one of my pinball machines today, so I'm trying to get the video out. But in a new interview with the Investopedia Express podcast, Real Vision CEO Raoul Pal says that his macro view is that we are in a recession right now and that it's going to get worse. He says the Fed shouldn't have done what they did, but the bond market tightened for them anyway. So, yeah, there you go. He says that they have to unwind the mess, but it could get messier before the mess gets cleaned. So they're making a bigger mess before they clean the mess, I guess. Using all the technical indicators that I look at, my view is that we're going to reach a proper bounce or a low, and he thinks that it could happen in June. So I'm kind of see, that's the thing. Bounce, yeah, we could have the bounce, but I'm saying to get back to that level, 40,000, you could see it, you could see us still be range bound for a while. When I was over on Crypto Debate and they asked me for my potential high for this year, I said maybe 55,000, and they were like, oh, so you think we're just going to be range bound? I honestly do. I think we could do something, like we had seen where we had basically that range-bound S&P market I just showed you back in 1994. But he does go on to say that the space is not going away. The central banks are building digital currency rails. Everybody's building everything. We're in this period where retail investors couldn't afford to dollar cost average anymore because their pocketbooks got hit by negative real earnings. Their wages didn't go up as fast as inflation, so they have to spend it at the supermarket and not crypto. Now, that's a very interesting idea, right? So when we had all the stimulus, people had extra money. They had, those checks that they got. And what was so crazy is we had seen Bitcoin purchases on Coinbase of exactly the same amount of the stimulus checks. People just literally took their check and just slammed it into Bitcoin, right? They can't do that now. Their wages didn't go up and they're having difficulty and they need to focus on paying bills and buying food. So crypto, unfortunately, has to take a little bit of a back seat, right? Now, I do want to just continue on what we were talking about the other day with Facebook. Remember we talked about David Marcus? Now, David Marcus had been involved with Facebook, Meta. I still can't get used to calling them Meta. It's so weird. Meta to me is not the name of a company, but then again, Uber wasn't the name of a company to me. Uber is super or extra, right? But now it's the name of a company. So I guess I'll get used to saying Meta. But getting back to with David Marcus, what was going on with that guy. So he was working for them with Diem, which didn't work out, obviously. But look at this, guys. They filed for 5 trademark applications for MetaPay, teasing crypto and digital payment platform. Now, obviously, we would assume that they would use a smart contract platform for this, right? However, very, very interesting that David Marcus is working on the Bitcoin Lightning Network. Very interesting. So I'm not saying that they're just going to go straight to the Bitcoin Lightning Network. Maybe they'll create their own blockchain or something like that. But you can see that they did file these trademark applications, and they described MetaPay as an online social networking service for investors, allowing financial trades and exchanges of digital currency, virtual currency, cryptocurrency, digital and blockchain assets, digital tokens, and crypto tokens. So I think that covers the whole kit and caboodle. Digital assets, right? Apart from payment and trading, MetaPay could also include a digital asset lending and investment service. The social media giant previously acquired the MetaPay domain back in December of last year, and obviously we know that their stablecoin project didn't work out too well. In fact, a lot of stablecoin projects have not worked out too well. I don't think I have to name the elephant in the room, but looking at why people are hesitant on getting involved in cryptocurrencies, there was a recent study that came out from Coupon Follow that asked a bunch of people. It was over 1,000. They had Gen Z, millennials, Gen X, baby boomers, and all of them were no-coiners. So none of them had any exposure to crypto. And you could see right here, don't understand its value, 42%. Value is too unstable, 39%. Seems like a scam, 35%. Security concerns, 31%. Or don't know how to, 24%. Obviously, that's over 100%, but they were checking boxes off, right? 18% of the respondents said that that learning more about the benefits of investing in crypto was the most effective approach to transition from skeptic to believer. That's why I'm here. That's why I make videos every single day. Tell your friends to get subscribed to Crypto Zombie. We're dishing out the information and news and charts every single day, bull or bear, right, guys? So the research found that members of Gen Z are more interested in government regulation and law enforcement within the nascent space. That was an unexpected data point. I wouldn't think that Gen Z would care about stuff like that, but apparently they do, guys. Apparently they do. So moving on to the real elephant in the room, I guess, USDC is now the most popular purchased cryptocurrency. It's one of the most in demand in May, and the holdings of the top 100 Ethereum wallets show a strong purchase of USDC. USDC was actually trading at around $1.02 the other day, while we had Tether going the other way. So why is this happening? Well, obviously people are very concerned about what's been going on with this guy right here. We're never going to forget this face, are we? We're never going to forget it, man. Well, this situation is actually getting a little bit crazier. LKB and Partners, which is one of the top law firms in South Korea, has reportedly decided to sue Do Kwon on behalf of investors who lost money in the UST collapse. The law firm has also decided to file an attached order to seize Kwon's personal properties. LKB will file a case against Kwon, a Korean national, on behalf of ordinary investors of the Seoul Metropolitan Police Agency. Some of LKB's employees may also join the case since they lost money in the UST collapse, according to the report. And something even crazier is that Terraform Labs' in-house legal counsel resigned amid the crisis, leaving the company dependent exclusively on outside counsel. Wow, the in-house legal counsel resigned. That's not looking good, guys. It's not looking good. I got to be honest with you. I kept thinking about, maybe just a little bit of degen play, just kind of buying Luna. And every time I go to do it, I'm like, all right, nah, let me not do it. And it just keeps falling more. It has these little fake out rallies, but the price just keeps falling, and if they do the fork, I'll be honest with you, just truthfully from experience, I do think that Luna Classic will actually pump a little bit. And will have some legs for like a little bit, but ultimately, look what happened with Ethereum Classic, guys. I just don't think it'll ultimately end well, but there could be some speculative plays here. But to be honest with you guys, I'd rather just focus on Bitcoin right now. There's a lot of opportunities for trading Bitcoin, dollar cost averaging, trying to, catch the falling knife of Luna. I don't know. I don't want to give you guys the wrong advice because, you could make money off of this. It's just, for me, it's too risky of a play. Maybe put a couple $100 in and see what happens or something like that. But anyway, enough with Terra Luna. Talking about some positive news so we can get on out of here. So we have two Israel-based credit companies, Max and Isracard, have inked partnerships with crypto-related platforms in order to allow cardholders to purchase Bitcoin. More bullish news that nobody cares about. Formerly known as Lume Card, Max is one of the largest credit card processors and issuers in Israel and a major non-banking financial institution. The firm reportedly issued 1.6 million credit cards and provides clearing services to more than 40,000 merchants. So that is just more of the Bitcoin network spreading its wings and flying all around the world. And speaking of the world's largest issuer of crypto ETPs has entered the US market with two index funds, 21 shares. They have their Crypto Basket 10, which offers a basket of the top 10 cryptos, and then they have their mid-cap index fund, which offers everything except for Bitcoin and Ethereum. A little bit more risky, guys, right? So as we can see right here, we are continuing to fall. So the next level of support right here where we could get a bounce is around 28,600. You see where we had this little bounce right here. We've obviously fallen out of this, you know, and then after that, you know, you're basically looking at 28, and then you're looking basically to go back down to those really, really low levels around 25 again. So this is why I said to be a little bit skeptical about this, and I was worried in yesterday's video, although I do still think we're getting a bounce up to some of these levels, even up to maybe the top of this area. Unfortunately, you know, we have two bearish patterns. We have the bear flag and we have the bear pennant. So that's like double bear squared, right? So double bear squared sounds like a band or something. So, oh yeah, guys, ultimately, you know, as we're sitting right here, keep an eye on it. But really, I hate to be that guy, but look at what stocks are doing. Look at what the S&P is doing right now. Look at what we're doing right now. Look at what Bitcoin's doing right now, right? So keep your eyes on the S&P. I could do all the TA in the world when it comes to Bitcoin, but you know, if we keep seeing, you know, traditional equities falling like what we're seeing today, then unfortunately we are going to still keep seeing Bitcoin fall. So yeah, that's basically my thesis for right now, and that's why I wanted to warn you guys that, you know, it could get worse before it gets better, but it will get better. And, you know, hey, maybe 2022 turns out to just be the greatest accumulation period for Bitcoin before we have that blast off move, right? So that is it for me, guys. Thank you so much for coming back to the channel. I love you. I hope you're having a great day today. Yeah, that's about it for me. So you guys rock. The reason I make these videos, if you do want to learn how to trade, you know, on this channel, I don't give trading signals. I'm not going to tell you when to long. I'm not going to tell you when to short. I don't do that. I don't think that that's fair. I think that if you want to learn, then, you know, you can watch these tutorials that are about to pop up, take your opportunity. If you don't want to trade, don't trade at all. Just dollar cost average. Come back next year, this time, and we will be happy little ducks, won't we? So thank you so much for coming back to the channel. You guys rock. Check out these videos if you want right here, right now. Until next time, stay crypto, and of course, peace out.